Well, again, we have shut ourselves off midstream, so this is now Note 10, Part 2. We're talking about involuntary dissolution. If there is a deadlock among the directors and the shareholders, particularly in a closely held corporation where there are only a few owners, if they've reached the point where they're constantly fighting and arguing, they can't agree on what should be happening in the business, where the business can be going, they can go to court and seek an order of dissolution. After hearing both sides, the court can decide that the situation is not salvageable and can enter an order terminating the corporation and again dividing the assets among the owners in an equitable scheme. If a corporation is guilty of a crime or a fraud, dissolution can be one of the punishments that the courts can impose. So if a corporation has been engaged in seriously fraudulent or illegal activities, then as part of a criminal conviction or as a civil finding of fraud, the courts can order the company to be dissolved. If corporate assets are being wasted or stolen, the shareholders can seek dissolution, usually in state court, usually by asking that the corporation be put into receivership. Receivership is a form of state court bankruptcy, usually only available to corporations and businesses, and in a receivership, someone is appointed to take over the running of the corporation with the basic job of finding out what debts and assets are there, getting all the bills paid off, selling off the assets, and if there's anything left at the end of that process, it would be divided among the shareholders. Bankruptcy on a federal level. Bankruptcy is a federal procedure. By the Constitution, it is given solely to the federal courts to handle bankruptcy and to Congress to make rules for bankruptcy. And if a corporation goes into bankruptcy, it can result in the corporation being dissolved. Although when we get to bankruptcy, we'll find out that many corporations actually go into bankruptcy and file Chapter 11 for the sole purpose of not being dissolved and not being involuntarily dissolved. They go into Chapter 11 because they're no longer at this moment able to pay all their debts, pay all their obligations. They seek to have all that restructured, and very often they will emerge from the bankruptcy court with fewer debts, fewer obligations, and able to go forward and still conduct their business. In both Rhode Island and Massachusetts, if you fail to maintain your annual reporting, your annual filings with the Secretary of State, your corporation will be dissolved by the Secretary of State. In Massachusetts, this is problematic, but it can be rectified by filing all the back due paperwork, and then you are retroactively reinstated as if you had never been dissolved. In Rhode Island, it's somewhat more difficult because if you do not file your annual return every year, if you do not maintain an agent in the state for service of process, then the Secretary of State has the right to terminate your existence, to dissolve you. And in Rhode Island, again, the Division of Taxation has to be involved in any reinstatement. So the Division of Taxation will go over all your books and try to determine if any taxes have not been paid since the moment of dissolution or even from before, and only after all back taxes have been paid in full to the state of Rhode Island does the Secretary of State have the authority to reinstate your corporation. Even after corporations are dissolved, there's a period of time, like in partnerships, called a winding up period. During this time, the former directors and officers have the power to continue to sell assets, pay bills, finalize the business of the corporation. In Rhode Island, by statute, this can last up to 5 years after the dissolution of the company. Reinstatement, if the Secretary of State in Rhode Island or Massachusetts dissolves your corporation, you can be reinstated, as we talked about a minute ago, and that reinstatement is retroactive. It basically goes back to the moment when you were dissolved, so it's as if nothing ever happened. It's as if your corporation was always there. Okay, that ends our discussion on Note 10. Be looking for Notes 11 and 12 coming soon.